Welcome back for the Ethereum video today. Thank you so much to everybody who likes, comments, subscribes, all that jazz. Really mutual appreciated. So let's take a look at Ethereum, and so far, and currently we're on the 4-hour chart. This is where well, the price right now is 136.05, and this is the BitMEX 24-hour or BitMEX 4-hour chart here. And what are we looking at? Well, we can see that this high over here is higher than this high here, which is the first thing I kind of wanted to point out, because over on Bitcoin on the 4-hour chart, the this equivalent high is actually higher, and there's 4-hour bearish divergence. As you can see, there would have been here had the prices gone higher, you know, and the RSI being kind of like this is what you're looking at over on Bitcoin. So had the prices come up here, but they didn't. And we're still just consolidating within this area. Does it look a little bit perhaps on the 4-hour chart like I might have this slightly lined up wrong? It depends, you know, and I'm willing to, you know, I'd be willing to accept that if that was the case. It does look a little bit maybe perhaps low, but the thing is that we've definitely not closed any 4-hour candles up above that, you know, since we've been looking at it, and that's been working really well for us in terms of just managing, you know, and I'm not a financial advisor, none of financial advice, none of it is at all, but in terms of managing small moves where you can do multiple times, in terms of there's a 7.7% move down here to the from the previous highs of 143 down to the 133.60 level. As you can see, like I said, the price is 135 at the minute. So if you'd played that over today, for instance, or whatever, then congratulations, well done to you and all that jazz. But we can't look to the 4-hour chart for divergence or whatever, because we have not got that quite yet. In terms of this thing, if the white line comes on up here and crosses over the red one and goes up towards the top side, then we could start thinking about maybe this being that would be quite nice timing. But you'd see that we'd see that in and around a breakout of this if there was one to the top side. That would be happening anyway. And that's the lack of divergence whilst consolidating. You know, what does that kind of add up to? Well, that means that you're giving the oscillators a chance to kind of breathe a little bit, and that's good, and sort of reset slightly, as I say, like, you know, towards this middle area, and that can be good, you know, of course, but we're still within this, and while we're within it, and while there's plenty of room to the right, I have to say that I've got to look down again to 126 potentially as being an area. Should this 236 Fibonacci not hold at 132, 132.95 is where that's drawn in at on this chart. So let's go up to the 24-hour chart, take a look at what we're looking at again here, and it's the story is shown on those 4 hours where it's all sprinkling around here is seen so clearly here with these two candles, just in this box above the 236, but below the sort of, generally speaking, where the resistance is on our overhead resistance on our ascending triangle here. And of course these things are normally sort of bullish patterns, and I say normally, it's the Sex Panther 60% of the time it works every time. Of course it's like I don't really think about them like that, but you got to talk about them like the textbook says to, so you know. So anyway, measured move would put us up towards this 382, for instance, and perhaps even this yellow line here, which is the 236 of the bigger Fibonacci retracement drawn in from the high. Wait a minute, if I still got that sat there where that is, yeah, this is the old Fibonacci drawn in from those highs. In fact, I should just move that down now during this episode, so that gives us something different to look at. So that's where that happens to be, but that's where we know historically there's some resistance in that area. Just before I move it away, we know that there is in that 175 area, because this is where this was operating at before, and this is the story that we lived, you know, sort of December to February time. But if I move this down now down to, is that the wick there, or is it where the other, I'm going to assume I've got it right on the other one, I just can't see because of the volume candles behind. So now then, where does the 236 of this thing come in at? So that's here. So it's below the 382 of the other one, and right in amongst where that blue line is, 155. Well, that doesn't strike me as much of a coincidence, because we've had that area in mind anyway. So so that would be the sort of the warning. If there was to be some sort of move out of this thing, then you could be looking at fake outs in around this area, and you not get the full measured move, is what people would talk about afterwards. But of course, what we think about in terms of these lines is we call them profit taking lines anyway. So in that one there at 150, 150, you know, essentially, and that kind of speaks for itself again anyway. 155 really where that is, and 163 where this one is, are the three sort of immediate profit taking lines should you be wanting to play that breakout, should it happen, should the prices open and close into that 140 area for more than 4 hours. Okay, so remembering back to where we were looking at before, we need it to close for more than 4 hours up above there. 12 hours, 24 hours, and of course that means you have to sacrifice some of your move, but you sacrifice a little bit, you sacrifice a couple of percentage or whatever in order to increase your ability to manage your risk. It's a worthy sacrifice, especially whenever you've been able to make 7% moves happily, or 5% moves, or whatever, playing between those two levels, with the chance of making a 10% move from time to time anyway. So you know, that's the scenario that we're looking at there. So yeah, I think that kind of does it for Ethereum. Nothing really much has changed, and won't have changed until we're out of this area. So that kind of sums us up for now. Still trending to the upside here. You know, the economic stimulus package that America's chucking at itself is doing a job currently, as you can see there on the SPY and the Dow Jones. You can see over here in SPY it's currently doing a job, you know, so that's good, but I think this is that there's a lot of weakness there. This is inorganic essentially, and there's a weakness underneath, and there's a potential here over on Bitcoin as well to revisit the sort of the lower end of this channel, or just to come in and set a higher low in, for instance. You know, as if we were to continue trending, and that could anywhere around 6,000, for instance, could happen. At which point, you know, you're easily looking over towards 125 on Ethereum. So thanks so much for tuning in. I'll see you in the next video. Like, comment, subscribe, share it with your friends, all that jazz. See you next time.